You don't get to be one of the richest people in the world without knowing something the rest of us don't. Often referred to as the Oracle of Omaha, Warren Buffett has a net worth of $125.1 billion, according to Forbes. In this video, we're going to tell you how Warren Buffett made this fortune. Many people believe that Warren Buffett is the greatest investor of all time. Just $100,000, about $1 million today, of investors' money was given to him when he started out on his own in the middle of the 1950s. He has developed this capital over the previous 70 years into a company with assets worth just about $1 trillion. When Buffett was 11 years old, he made his first investment, paying $38 a share for 6 shares of Citi's Service preferred stock, 3 for himself, 3 for his sister. He built several more companies after turning a tiny profit on this one. When he was barely 13 years old, he submitted his first tax return. It was for the year 1944 in the calendar. Overall, he had made $592.50, more than half of which came from a paper round and the remaining sum through investments. He paid tax of $7. Prior to enrolling at Columbia University, where he eventually met his mentor, Professor Benjamin Graham, the young businessman studied at the University of Nebraska. Graham, who owned his own investment company and essentially wrote the book on value investing, was a mentor to Buffett when he was young and just out of college. Unfortunately, Graham stopped the project after the young entrepreneur had joined it for a few years, and he soon returned to Omaha. Soon after, Buffett was approached by a group of relatives and friends to put their savings in the stock market. From 1957 to 1968, the so-called Buffett partnerships had an annual return before fees of 31.6% as opposed to 9.1% for the Dow Jones Industrial Average. Buffett adopted a similar approach to investing as Graham did. The Warren Buffett portfolio and the rise of Berkshire Hathaway. In the early 1960s, Buffett began purchasing Berkshire Hathaway stock for the portfolios of his partners. Berkshire was a failing textile company at the time. Its competitors could undercut the firm on pricing since they had far lower cost bases. The company's market value dropped below the value of the assets listed on its balance sheet as losses increased. The investor wanted Berkshire to start shutting down its factories and give the money back to its investors, which would have resulted in a sizable, risk-free return for all of its investors. Buffett's plan was rejected by Berkshire's management, so he made the decision to take over the company himself. Buffett acquired additional businesses, primarily in the insurance industry, using funds from Berkshire. He gained his initial foothold in the market by purchasing the insurance provider National Indemnity Company, situated in Omaha, for $8.6 million in 1967. In addition to being a well-run, successful insurance, National Indemnity also had a sizable investment portfolio that served as a useful source of funding. At present, Berkshire Hathaway has more than 60 businesses and has over 300,000 employees. Along with a $300 billion portfolio of stocks, it also owns the utility behemoth Berkshire Hathaway Energy, the restaurant chain Dairy Queen, the battery manufacturer Duracell, the insurance Jayco, the restaurant chain Jayco, the railroad BNSF, and the restaurant chain Dairy Queen. Warren Buffett's net worth exceeds $100 billion. Buffett has also amassed a substantial personal fortune. With a net worth of $125.1 billion, he is the 5th richest person in the world. His exact ranking changes, although he consistently ranks in the top 5. The majority of Buffett's assets are invested in Berkshire Hathaway stock. The shares have returned 20.1% annually since he took over the company in 1965 versus 10.5% for the S&P 500. The top stocks in Warren Buffett's portfolio. One of Buffett's most famous quotations, rule number 1, never lose money, can be used to describe his investing philosophy. Never forget rule number 1. This is rule number 2. Investors have been looking for investment possibilities with a low failure rate but high return potential since the 1950s. Buffett sticks to businesses and industries he is familiar with in an effort to reduce the danger of failure. He says, risk comes from not knowing what you are doing. He prefers to invest in businesses that have a sustainable competitive edge, such as a well-known brand or significant economies of scale, and he will not overpay for any company. He wants to buy when other investors are selling since he is a value investor. Buffett put $5 billion of Berkshire's funds in Goldman Sachs in 2008, when the global financial system was on the verge of collapse at extraordinarily favorable terms that would have been inaccessible to the average investor. The wager ultimately brought in a profit of over $3 billion for the conglomerate. He also invested money at the same time in Dow Chemical, Bank of America, and General Electric. Despite this bold wager, Buffett typically avoids making market predictions or speculating on stock prices. He thinks that when buying a stock, investors should treat the transaction as if they were purchasing the entire company. He has urged others to look at their stocks as a company and own your stocks as an investment, just like you'd own an apartment, house, or a farm. The importance of owning something entirely that provides you with money to invest is something you may learn from Warren Buffett's life. Saving $500 each month and investing it in blue-chip companies is one thing. That's lovely, and it increases wealth. However, if your goal is to employ blue-chip stocks as part of the plan to become extremely wealthy, you must already have a financial asset that provides you with a sizable stream of regular income. Imagine being the owner of a $3 million apartment building that generates $300,000 in annual revenue. You would have a life made if you owned an asset like that. You could sign up for the DRIP programs of your top 15 stocks, and $1,000 would be invested in each of them each month. When you have a major cash-generating asset that provides you with regular money to invest, wealth starts to get developed very, very quickly. Life hacks that helped Warren Buffett to make his fortune. Decide that you're going to be rich. In order to be rich, you have to believe that one day you will be. According to the Huffington Post, Buffett once reportedly said, "I always knew I was going to be rich. I don't think I ever doubted it for a minute." For best results, set high expectations for yourself and work toward your goals and aspirations. Start saving at a young age. By age 15, Warren Buffett had earned $2,000 delivering papers and selling magazine subscriptions, according to CNBC. He used $1,200 of his earnings to invest in a farm, forming a profit-sharing agreement with the farmer. Reinvest your profits. When Buffett was in high school, he and a friend bought a pinball machine. According to biography, the pair put it in a barber shop and quickly earned enough to buy more machines and install them in other shops. The friends eventually sold all the machines for a profit of $1,200. Graduate college early. Because of Buffett's sharp mind for business, it's no surprise that he managed to finish college in 3 years, 2 at the Wharton School of Business and 1 at the University of Nebraska, according to the book Icons of Business. Although college costs weren't nearly as high in Buffett's day as they are today, it's likely that he saved money by completing his education in 3 years instead of 4. Bounced back from rejection. Ironically, Harvard Business School rejected Buffett after his interview, but instead of sulking, he headed to Columbia and met Benjamin Graham. Graham is a legend in the investment industry, and he became Buffett's mentor. Much of Buffett's incredible investing success could arguably be credited to Graham and the lessons he taught him. Communicate in person. In 1951, when Buffett was looking for companies to invest in, he stumbled across Jayco. To investigate further, he rode a train to the company's headquarters. According to Jayco's website, the office was closed, so a janitor let him in. Luckily, a top executive was there, and they had a meeting. After, Buffett made one of his earliest stock purchases, invested in Jayco. Today, the insurance company is a subsidiary wholly owned by Berkshire Hathaway. Be persistent. When Buffett graduated college, he wanted to work on Wall Street. He offered to work for his mentor Graham, but Graham said no, wrote author James Altucher on his website. So, Buffett went back to Omaha, but he still continued to pitch ideas to Graham. Eventually, Graham hired Buffett. That's all we got for you today. What are your thoughts on this? Let us know in the comments down below. If you liked and found today's video fascinating, please give us a thumbs up. Don't forget to subscribe to our channel and click on the bell icon to be up to date with the most exciting things as soon as it's released. Thank you for your time. See you in another video shortly.